Hi everyone, welcome to another video by Optionables. My name is Saket and today in this video we are going to look at what are the expectations for this year's Union Budget 2022. On 1st of February, our Finance Minister Nirmala Sitharaman is going to present the Union Budget 2022, and today in this video we are going to look at what exactly we can expect from this budget in three different aspects. In the first aspect, we are going to look at what the economy needs and what problems economy is facing and what is the expectation on the economic front. Along with this, we are also going to look at what are the individual industrial needs as well as what is the expectation from each industry for this particular budget. Our second aspect will be what are the stock market investors expecting from this budget, because since we are a trading channel, it is pretty important for us to cover what the stock market investors are expecting. And finally, we are going to cover this aspect where we are going to see what are the expectations from salaried people as well as individuals like you and me. So these things will be covered in today's video, and before moving on, if you are liking the content on this channel, then please do hit the like button, share this video as well as subscribe to Optionables. So now we are going to cover the first phase, that is economy as well as industry. So now if you look at the Indian economy, during pandemic it got hit pretty badly, but it has recovered quite well. So Indian economy is forecasted to grow around 8.5 to 9% the following year, and we are almost back to our pre-COVID levels as well. But we only have one issue, that during this pandemic period, we had a lot of unemployment or increase in unemployment rate. So the unemployment rate in India during this pandemic actually rose from 7.5% to close to 8.6%. And this is a pretty huge jump. Government should definitely try to focus on creating more jobs to bridge this unemployment gap. Now, if you look at it, it is not just about unemployment. There is also a huge wealth gap between the rich and the poor. So now I am going to present you a data which will help you get a better understanding of wealth inequality in India. So if you look at the top 10% people in India, so we have around 1.4 billion, which is 140 crore people. In the top 10%, which accounts to 14 crore people. So this 14 crore people have around 60% of national income. They earned 60% of the national income last year. And now coming to the bottom 50%, that is close to 70 crore people. So they earned close to 12% of the total national income. So you can see the difference between the income levels of rich as well as poor. So this is definitely a capitalistic economy, but the difference between rich and poor is constantly increasing. And the only way to bridge this particular issue is by creating more jobs. And definitely the focus of government will be to address this unemployment and focus on creating more jobs. And then coming to the third wave of pandemic in India, so even though the impact is not quite a lot, some industries are affected due to partial lockdowns as well as curfews again. So it is for us to look out what the government proposes or what measures the government is going to take to bring in quick recovery in these industries as well. So now we are going to look at industry-wise what problems each industry is facing and what exactly are they expecting from this budget. So one thing that we definitely talk about when we say COVID is about pharma. So first we'll be starting off with the pharmaceutical industry. What are the expectations from this particular budget? For this, we have to understand what is the issue that the pharma industry is facing. So now the major issue for pharma industry is it has to put a lot of its money into research and development. If you look at the past data, as per Live Mint report, 15 to 20,000 crores have been invested by these pharma companies on research and development alone. This is quite a huge number, and these companies will definitely expect some kind of deductions on taxes because they are spending so much on R&D. So government is definitely giving them a lot of deductions. So government is giving them 100% deduction on whatever they spend on research and development. But there's a catch here. So before 2020, they were actually getting 200% deduction. What does this actually mean? So let's say there is a pharma company which ends up spending 100 crores on its research as well as development. So this pharma company before 2020 could claim tax deductions of close to 200 crores. So whatever is the profit, it could subtract 200 crores and later pay tax because there was 200% deduction on research and development. Recently in the budget 2020, they reduced this 200% deduction to 100% deduction. That means if a company is spending 100 crores, it can only claim 100 crores worth of deduction. So this is again expected to be revoked, and they are going to restore the previous 200% deduction. So this is what pharma companies are also expecting from this particular budget, because that is going to give them a lot of incentive to spend more on research as well as development. So now we will see what more is the pharmaceutical industry expecting. So if you look at the data, close to 80% of medical equipments are actually being imported to India. When so many equipments are actually being imported, the demand for domestic goods is going to be low. And to give a number, close to 46,000 crores worth of medical equipment is being imported. Now, how do we solve this problem? It is pretty simple. Just to make the import costlier so that people will come and buy from domestic industry. So right now, the import duty on these equipments are somewhere between 0 to 7.5%. And Indian pharma companies are expecting it to make it 7 to 15%, so that whenever people start importing, the import cost will be high and they will be encouraged to buy from domestic pharma companies. So this is the broader expectation from the pharma industry. Next, we'll discuss about one more major sector which is the key for driving the jobs in India, and that is infrastructure. So now if you look at the infrastructure spend in India in the previous year, it has been around 5.54 lakh crore. And this year, people are expecting an increase of close to 12 to 25% in the infrastructure spend. And this infrastructure spend is extremely necessary for India to actually boost the employment as well as the economy. So there are no specific demand from the infrastructure sector or specific expectation from these sectors. Only thing that they are hoping for is that the government allocates a lot of money or lot of resources towards infrastructure, which will eventually end up boosting the infra companies. That will also bring us to a next sector which is very closely related to infrastructure, that is metals as well as mining. So now let's see what are these metal companies actually expecting from this budget 2022. So the major demand from these companies are to reduce the coal cess which currently exist. So what is this coal cess, or what exactly does it mean? So now more than 60% of aluminium is actually being imported to India. And whenever these companies import these aluminium, they have to pay a lot of duties as well as taxes. So the major disadvantage for these companies are that not just this, whenever they produce any product, they have to pay 15% of that as taxes again. So that means when you look at the domestic producer, the raw material price is already up. So it has shot up last year quite a lot. And not just that, on top of this, there are some additional charges which is going to increase the cost quite a lot and make them less competitive. So that's why domestic metal industry is expecting to reduce or remove the cess, so that will help them reduce their cost as well as become more competitive in this particular industry. So next we'll move on to a particular industry which will actually end up using steel and aluminium the most, and that is automotive. So from the automotive sector, the only clarity what they are looking for is again infrastructure for electric vehicles. The demand for electric vehicles is shooting up in India. Previous year in India, totally 1 lakh electric vehicles were sold, but this time, that is this particular year, close to 3 lakh electric vehicles are sold. So already there is a 3x jump, and this is only further expected to continue. So one thing these companies are looking for is the charging stations. So that is the only problem that electric vehicles face, that where do you actually charge them if you run out of charge. So there is no proper charging infrastructure right now in India. So that is something they are keenly looking for. They want government to spend on these infrastructures for electric vehicles, which will help them boost their sales. If government is providing facilities for electric vehicles, then that will definitely encourage people to go and buy electric vehicles, and in turn this will boost their sales. And one more thing what they are looking for is, right now if you see that you get a lot of exemption on duties as well as taxes when you actually go to buy electric vehicles. So now they are asking for little more deduction, or just to make people or encourage people to go and buy electric vehicles. And that's the reason they are looking for either cheaper loans specifically for electric vehicles, or to reduce their duties as well as taxes further, which will make it more attractive. So now if you look at this new electric industry, EV industry, so you see a lot of small and medium scale industries or medium scale manufacturers coming up. And that will bring us to our next industry, that is MSME. So what exactly are these MSME expecting from this particular budget? So now if you look at MSME, there are close to 6.3 crore MSMEs in India. So these MSMEs are actual potential growth drivers for India, because the small company today is going to be a big company tomorrow. So one thing these MSME face an issue with is rising capital. So the thing is, not many people actually give them capital easily, and when you actually go for a bank to take a loan, so that is again an issue, because you won't have a lot of credibility. You might have just started 2 years ago and you don't have a lot of credibility of profitability, and banks usually hesitate to give you loan. This is one issue which they have faced before also, and they are still facing, and this is something which they want to address in this particular budget. And that is one thing they are looking for is cheaper loans, obviously, because you have to encourage small businesses to come up, and only then you can actually see the economy boom. So if there is cheaper access to capital, that will definitely help these MSME push for growth. So one thing they are looking for is easy availability of credit at a cheaper rate, because usually what ends up happening is, when there is no credibility for a particular business, then the interest rate charged for that will be quite high. So if the interest rate will come down, it will actually help these MSMEs get access to capital they require. And there's one more issue what these MSMEs face. So why doesn't a big investor go and put his money in, say, a private MSME? The only issue is, for him, the capital gains tax is not going to be 10% like the public company. So for example, let's say you put in Infosys or TCS, you buy shares of Infosys or TCS. When you remove or sell these shares, you are going to get long-term capital gains tax, which is just 10%. But if you make a private investment, the tax is going to be quite high, somewhere around 25 to 30%. So this will discourage most of the big private investors from investing directly into private companies. So if they can make the treatment of private investments as well as public investments the same, then again they will be encouraged to put into small and medium sized businesses, because tax wise they will be getting no benefit if they invest in large companies. So this is one more thing what they are expecting from this particular budget. So this will bring us to the next sector, which is the backbone of Indian economy, that is agriculture. If you look at agricultural sector, it has not actually got severely impacted like the other sectors during COVID. So there is no specific expectation from agriculture sector, except for the fact that more clarity is expected on farm bills. So since the farm bills are withdrawn, what is the step forward? And more clarity is also expected on the minimum support price, which the farmers are keenly looking for. Apart from that, there are also some expectations based on subsidy, as well as some agricultural boost or some allotment of resources towards agriculture. If you broadly look at it, it's more of clarification of the MSP as well as farm bills, as well as boost to agriculture by increasing the resources. And this will bring us to our last sector, which was most hit in this pandemic, that is real estate. If you can see anywhere around, the real estate sales have gone down quite a lot during this pandemic. So most of the places which were rented, so now they are vacant, and most of the apartments which were constructed are unsold, and all this was due to pandemic. So real estate sector is highly dependent on this budget for it to get a boost. So they are the worst hit sector during this economic crisis, and they are looking for a recovery badly. So one thing they are definitely looking for is easier home finance access to people. So they actually go take some finance and end up buying real estate. So this is one thing they are looking for. There is no specific economic booster which they are looking for, but they definitely want people to get more access to funds, so they will be able to come and make their investments in real estate. So this is broadly what are the issues the sectors or the industries are facing and what they are expecting from this budget 2022. That will bring us to our next point. What are the stock market investors and traders expecting from this particular budget? So when you look at the investors and traders, there are majorly 4 expectations which they have. The first one is removal of speculative income. So if you look at the classification of incomes from stock market, there are broadly 4 types. One is speculative income, short-term capital gain, long-term capital gain, as well as business income. So business income is mainly your F&O trades. Let's say you buy a future, sell after 2 months, or you buy an option, sell after 5-6 days. So all this comes under business income. Now long-term capital gain and short-term capital gain are quite simple. So you buy today, hold for more than 1 year, it becomes long-term capital gain. You buy today, sell let's say after 3 or 4 months, it becomes short-term capital gain. So along with all of this, there is one more classification of income known as speculative income. And this income is when you do intraday. So let's say you buy a particular share for intraday, equity shares, and you sell it on the same day and make a profit of 1 lakh. The only issue here is, since this 1 lakh will be treated as speculative income because it is intraday, you bought and sold it on the same day, it will be taxed at 30%. But instead of this, if it is classified as short-term capital gain, maybe if you have held it just for 1 day or 2 days, it will be classified as short-term capital gain and you just have to pay 15% on this particular income. So traders are broadly expecting in this budget to remove this whole concept of speculative income and just keep 3, that is short-term capital gain, long-term capital gain, and business income. So this will first of all simplify the structure, and it will also encourage intraday trading. So you don't actually have to buy the share and hold for 3 days or 4 days just to reduce your taxes on your gains. So next, it will bring us to the second expectation what people have from this particular budget. So they're expecting the short-term capital gains as well as long-term capital gains to be treated as the same way. So what exactly do I mean by that? So if you look at long-term capital gains now, let's say you earn more than 1 lakh after holding the share for more than 1 year. So that time, anything you earn more than 1 lakh, on that amount you will be paying 10% as tax. But in case of short-term capital gains, that is not the case. So what exactly will end up happening is, even if you earn 1000 or 10,000 rupees, you still have to pay the full tax of 15%. So now people are actually expecting short-term capital gains as well as long-term capital gains to be treated in the same way. That means, let's say a person earns 1 lakh in short-term capital gains, he won't be taxed. And anything he earns above 1 lakh, only then he will be charged 15%. This will also encourage many people to do short-term trading as well. So this is one more expectation what they are having from budget 2022. And now looking at the third one, that is security transaction tax, is a tax which the government charges whenever you buy or sell security. So they charge 0.01% of the total value you have purchased or sold. So in the last year alone, government made close to 17,000 crores just by collecting STT. And now investors are expecting government to actually slash STT. There are many reasons for this. One, you can obviously see how the foreign institutions are selling. Every day they are selling close to 5,000, 6,000 crores, and they have already sold over 1 lakh crore in the past 3 to 4 months. One more thing they are looking for is clarity on the tax structure, and any such measures of reducing STT or anything will definitely boost the stock market, and we can expect markets to rally post this news. And that will finally bring us to the fourth and the most talked about topic last year, is the cryptos. So there is still lot of speculation as well as lot of doubts regarding what exactly are cryptos and how are they going to be regulated, because every time you have a news which says that government is trying to regulate crypto and later cryptos fall 10% and it comes back up again. So people really don't know what the government is intending to do with cryptos, and definitely investors will be more keen on getting clarity about how exactly they are going to regulate crypto. These are the 4 broad expectations what investors as well as traders have from budget 2022. This will bring us to the last segment, that is, what is the expectations from individuals as well as salary from budget 2022. So the first or the broader expectation is to increase the deduction limits. So right now we have deductions under 80C as well as 80D. So the most popular deduction under income tax is 80C deduction. So you get deductions for investing in ELSS, for having an FD and many more. So even you get deductions on home loans and quite a lot. So the thing is, this limit right now is 1,50,000. That means you can claim deductions worth 1,50,000 under section 80C. So what they are expecting the government to do is to increase this deduction limit. Let's say even from 1,50,000 they make it 2,50,000 or 3,50,000. Most of the people who are paying tax are going to actually come under no tax bracket. So what is the reason government will actually end up doing this? What is the main reason? The main reason is even today in India, the tax paying amount is very low. Hardly 6 to 7% of the entire population of India ends up paying tax. So the idea of government is to encourage more and more people to come and file their tax returns, because that is extremely necessary for the economy to grow. Their whole idea is to encourage many people so that they come and file returns, and someday they also end up paying tax if their income is higher than the bracket. Right? So that's the reason. This is one expectation what they are having, to increase this deduction limit. So this is not just in section 80C, so section 80C as well as D together they are expecting increase in the limits. So next expectation what people have is with respect to housing loan. So that is something even the real estate companies are requiring, and even people are expecting some more deductions with respect to housing loan. One huge reform what they are expecting is that the complete deduction on repayment of housing loan. Now you don't have complete deduction of your housing loan repayment, so that is something they are keenly expecting, even the big real estate companies, because it will encourage more people to go and take loans to purchase homes. And next we'll see what is the expectation apart from this. That is surely going to be dividends, because whenever an individual actually ends up purchasing the share, so they get dividends on which again they are taxed. So they are expecting some relief on this dividend taxation. So these are the broad expectation with respect to tax front for an individual. So now you might ask, by doing all this, isn't the government going to lose quite a lot of revenue? To be honest, it's no, because top 1% of taxpayers, so hardly we have close to 5 to 6 crore taxpayers or tax filers, and in that 1% of taxpayers, top 1% contributes close to 1/3 of the total taxes paid in India. And if you take top 5% of the taxpayers, they contribute close to 66% of the total taxes paid in India. So if you actually see the number of people who actually filed their taxes between the group of 2.5 lakh to 5 lakh is somewhere close to 17% last year. And if your income is under 5 lakh, that means you are not going to pay tax. And what these deductions will do is it will encourage more people to come and file their taxes, because if they fall under 5 lakh, they really don't have to pay any sort of taxes. So last time it was 17%. These measures might actually help or encourage them to come and file their taxes and increase this number. So finally we come to the last point, that is what are the salaried people expecting. So one thing that is happening in pandemic is work from home. You can see many industries, many top IT industries are actually preferring people to sit and work from home. This has got a whole new challenge for these employees, and that is increasing their cost. Before, when they were commuting to office, they didn't have a lot of expenses. One is the electricity expense, water, as well as high-speed internet charges, UPS, and many more. So if a person is permanently working from home, or even if he is working from home in shift, he has to have a lot of upfront expenses as well as recurring expenses to maintain this. And one thing these people are expecting is additional deductions for work from home employees. That means if, let's say, a person is working from home, he can get to claim around 50,000 or 1 lakh worth of deductions from his income tax, because he has a lot of expenses which he wouldn't have got if he had actually gone for the job. So this is one thing that work from home employees are pretty keen on, and this will help them quite a lot on saving their taxes. So this will bring us to an end of broadly what each one is expecting from this budget. This is going to be a pretty exciting budget on 1st of February 2022. So all this what we discussed now are just the expectations of people from the government. But government itself has a lot of challenges which it faces. So it is not so easy that the government just comes and makes all these reforms at once. So what exactly is the problem? The major problem government will face is the mismatch between the total expenditure as well as total income for the government. So if you see during pandemic, government has already made a lot of expenditure on stimulus as well as healthcare. And on top of that, government is not able to meet its divestment target. So what is divestment target? Every time the government actually tries to sell a stake in publicly owned enterprise or government company to a private sector, so it can actually get some funds. So government is not even able to meet that, and the tax collection during pandemic has gone down substantially. With all this, income of government has reduced quite a lot, whereas the expenses of government has increased. So this will lead to a whole new problem of fiscal deficit. If fiscal deficit is high, government will end up borrowing from other countries. That will further cause a lot of problems to the economy in the longer run. Not just this, if the government tries to maintain an expansionary fiscal policy, then inflation in India is already pretty high due to the excessive liquidity. So this will further boost the inflation, which will force the RBI to increase the interest rates, and that also will create a whole new problem for itself. Government is right now in a pretty tough situation where it has to maintain balance between future prospects of economy as well as the current need. So it has to weigh both and try to prepare a proper budget. So let's find out if Nirmala Sitharaman will be able to do it or not. So with that, we also come to the end of this video. If you have liked this particular budget video by Optionables, and if you have found it useful, then do not forget to like this video, share this video, as well as subscribe to Optionables. Thank you so much for joining, guys.